Assalamualaikum warahmatullahi wabarakatuh. My name is Ainur Rosidah. Today I will present about inflation accounting. First I will explain about what is inflation accounting. Inflation accounting is a special technique used to factor in the impact that soaring of plummeting costs of goods in some regions of the world have on the report figure of international companies. How is inflation accounting work? When a company operates in a country where there is a significant amount of price inflation or deflation, historical information on financial statement is no longer relevant. To counter this issue, in certain cases, companies are permitted to use inflation-adjusted figure, restoring number to reflect current economic values. Inflation and deflation. Inflation accounting is used directly to compensate for effect of inflation or deflation. Inflation is gradual decline of purchasing power. Its dollar has due to price increase over time. Deflation is similar concept. Is this the gradual decline in purchasing power over time? But inflation and deflation are not specific to one product or service, but rather other industries and market. Small amount of inflation are considered healthy for economy. For example, the Canadian government aims to keep inflation at 2%. Such a small amount of inflation does not require inflationary accounting. When inflation or deflation become too great, often referred to as hyperinflation or stagflation, inflationary accounting becomes necessary. Then, inflation accounting method. There are two main methods used as inflationary accounting method. The first is current purchasing power or CCP, and the second being current cost accounting or CCA. The current purchasing power method involves adjusting to financial statement and the associated number to the current price. For non-monetary items, this is done by taking the historical figure and applying a specific conversion rate based on the price index. The current cost accounting method takes the fair market value or FMV instead of the historical cost. With the method, all the monetary and non-monetary assets must be adjusted to their current value. For the example of inflation in Indonesia 2021, the development of the consumer price index or CPI was recorded to be low in early 2021. January CPI 2021 monthly inflation will be 0.26% MTM, lower than actual inflation previous month by 0.45% MTM. This development was mainly influenced by the slowdown in inflation in volatile food or VF, and deflation in the administrative price or EP category in middle rising core inflationary pressure. Rising core inflation was mainly driven by commodity inflation rise and set disease and a follow-up impact of VS inflation. This graphic in this page for inflation per month on annual basis. January 2021 CPI inflation was recorded to be quite low at 1.550% or year-over-year, lower compared to the previous month in inflation of 1.68% or year-over-year. This realization was mainly driven by slowdown in core and VF inflation, while AP inflation record an increase. In the last summary for today's presentation, inflation accounting is used in time of significant inflation of deflation. It is used to adjust counting number and financial statement to reflect more accurate representation of the cost and income of given time. Inflation accounting method can only be used if permitted by accounting standard which vary depending on the reporting location and the accounting standard being followed. The two main inflation accounting methods are current purchasing power or CPP and current cost accounting or CCA. Both methods can result in very positive impact on understanding the actual financial value of a company. Thank you. Assalamualaikum warahmatullahi wabarakatuh.